How's it going, guys? I am a retail investor who has a very high conviction position in Alibaba stock. And in this video, I'm just going to kind of describe why that is. Why do I have Alibaba as a large part of my portfolio? Now, I've been in this stock for several years now. I've been kind of buying the dip that has been presented to us over the last, well, frankly, 3 years. I've been just kind of slowly buying the dip. So I've been following the stock for a long time, and I have a pretty good understanding of it, and maybe not the best understanding of it in the world, but I think I have a better understanding than a lot of other investors, and especially those who are just kind of looking into the stock for the first time. So in this video, I'm just going to kind of look at this slide that you can see in front of you, and kind of share my thoughts on it a little bit, and also why I chose to make Alibaba a large part of my portfolio. Now, just to like touch on some of the basic numbers on this slide, we can see under their financial highlights for the last quarter, you have total revenue of 32.6 billion, which is a 7% growth rate year over year. Now, the 7% growth rate is modest, but what's great about it is it's an accelerating growth rate. Now, Alibaba got hit pretty hard during the regulatory crackdown that occurred around late 2020, 2021, right, where the CCP just decided they wanted to change up the regulatory landscape for these internet companies within China. And Alibaba got hit very hard as kind of their legacy mega cap within the country. And, pre-regulatory crackdown, pre-pandemic, they were growing at a very high clip. They were growing at like 20, 30%, if I remember correctly. And kind of everything that happened in the world, in the economy, in the regulatory landscape, it kind of brought that growth rate down to basically zero. However, as time has gone on, management has done a really good job of investing strategically, re-optimizing their business, marketing, cutting waste, etc., etc. And they've been able to get that growth rate to re-accelerate. And you can see in this slide that they posted a 7% year over year growth rate. And that's a re-acceleration. So this is a business that experienced a tough time and now is beginning to come back. And you can see here on their legacy business, their Taobao and Tmall business, CMR grew at 12% year over year, primarily driven by the improvement of take rate. And their cloud revenue business, or the cloud business, is another very key pillar, a foundational pillar of their business. And that growth accelerated to 18% year over year. Now, 18% is a very, very healthy growth rate. Now, cloud is not their foundational, like their foundational pillar of their business, but it's their number two business. And for that to post 18% year over year growth, especially an accelerating growth rate, is very encouraging as an investor. And another really interesting kind of narrative that has started to emerge within this business is their AI related product revenue. It maintained a triple digit growth rate for the seventh consecutive quarter, right? So AI services are growing at a triple digit clip. That's over 100%. And this is a business that nobody is really talking about, which is interesting because AI is this massive, massive buzzword. It's this narrative, and it's a narrative that is commanding very high valuations, especially in the West. In the US markets, investors are really willing to pay a premium for anybody that has been able to kind of tap into that AI narrative. But in China, with their legacy sort of company, Alibaba, it doesn't really get talked about. And Alibaba is trading at a very low valuation of 15 times earnings. And you have several very positive catalysts that are kind of beginning to gain traction, beginning to manifest within China, within Alibaba itself. Acceleration of their core business, their core commerce, Taobao, Tmall, acceleration of their cloud business, and then a massive explosion of their AI business. And this is a company that's only trading at 15 times earnings. And that's a valuation you're really not going to see anywhere else. And the great thing about it is if you buy into this stock today, you're getting that growth, you're getting that acceleration in growth, but you're not paying a high premium. And if you are a long-term investor with a fundamental, like a value sort of approach to investing, fundamental approach to investing, it's a very intriguing investment opportunity because you're buying a profitable business that is growing, that is an acceleration within their core businesses, um, a company that's buying back shares, an economy that's growing, an economy that's becoming more friendly once again to businesses and just capital more broadly. It's very interesting, and you're not paying any hype. And the thing about Baba is it was in a downtrend for about 2.5 years. It was pretty much down only for about 2.5 years, and then the stock consolidated and kind of chopped sort of sideways, just an accumulation phase for quite some time. And now, for the first time in several years, we're starting to uh, experience an uptrend. We're in the very early stages of an uptrend. So it's a very good time to buy because the downside has already been experienced. The accumulation phase has been established, and now we're beginning to break out of that accumulation phase. And it's in the very early stages. So if you believe in this business and you are able to digest these numbers for what they are, you're essentially early. You are early to probably the next move in the legacy business within China, right? Alibaba is by far one of the legacy businesses within the world's second largest economy, right? It's like buying Microsoft, it's like buying Apple or Amazon, and you're buying it in China at a much lower valuation and also a growth rate that's likely going to exceed that of US companies within the next couple of years once they really get this business model dialed in. And that's very exciting, right? If you're a little bit patient and you kind of understand like these global trends, the economic trends within China, sort of the capital that will begin to flow out of money markets, bonds, treasuries, when rates begin to come down, Alibaba is really set up to probably make a very good move, a very strong move. And I would even argue that if you play it right and you are patient and you do have conviction, these current prices could pose as generational entries, right? This is a stock that could really make your investing career. Like, I truly believe that. And as I said, this is a stock that I have maintained conviction in throughout the bearish period. I was there all along. I was buying the dip little by little. Every couple quarters, I would buy a few more shares, building out my position. And now, where we're at right now, at the current stock price, I'm pretty much break even. So, this next move up could be quite violent if the market begins to actually price in this reacceleration and their AI business as well. And it's very, very intriguing. I must say, it's a very intriguing proposition. And I guess as an investor, I kind of like to be early. I think that one of the keys to becoming wealthy is kind of the system of you have to be right, but you also have to be early. It's a combination of being right and it's a combination of being early. So, being right um, is one thing, right? Right. So, for example, like if you have like a stock that's been going up for the last 5 years, just slowly climbing, climbing, climbing for the last 5 years, you're probably buying something that's pretty high quality, right? But realistically, you missed out on the majority of the move. Like people that got in early are the ones who made money. You're getting in late. There might still be upside, but you're not gonna make your financial career. You make your financial career by being contrarian, by being early and being right. You got to take some risk. And the thing about Alibaba is it's not like some speculative stock. It's not like some speculative stock that is pre-revenue or unprofitable or free cash flow negative, right? This is a stock that is the exact opposite of all those things. It's accelerating in terms of its growth rate, in terms of its profitability, its EPS, its free cash flow. You have these new narratives that are starting to unfold with cloud and AI related services. I would say that this is a very intriguing opportunity, and I continue to hold shares. And if we get another dip here, I will probably add more to my bag as well. But these are just kind of my general thoughts, just kind of off the cuff here, as someone who has followed the stock for a long time as a retail investor. So if you were looking at investing in the stock for the first time, continue to follow my channel. I'm going to make more videos like this, sharing my thoughts. This is just kind of, like I said, off the cuff, kind of quick little video here. But yeah, stay tuned for more content. All right, thanks for viewing, guys.